Welcome to today's market report. European stock markets traded higher on Thursday, with investors buoyed by progress over Brexit negotiations and US stimulus talks ahead of Bank of England's latest policy-setting meeting. The DAX in Germany traded 1% higher, CAC 40 in France rose 0.5%, FTSE climbed 0.3%. EU and the UK negotiators continued to discuss the future trade relationship between the two sides, with a breakthrough still seemingly tantalizingly far away. European Commission President Ursula von der Leyen told the European Parliament in Brussels on Wednesday that there is a path to an agreement now on a deal, with fishing rights appearing to remain a key sticking point. Helping sentiment was the news that Germany and France will begin inoculate their citizens with the Pfizer-BioNTech vaccine in the last week of December, once it is approved by the European Medicines Agency. Across the Atlantic, negotiations over a new coronavirus relief package continued on Wednesday, with senior US lawmakers on both sides sounding more positive than they have in months about approving a $900 bill relief stimulus. The US Fed, meanwhile, held off from increasing its asset purchases, although Fed Chairman Jerome Powell said it will maintain its massive asset purchase program until it sees substantial further progress in employment and inflation. The Bank of England is next up, holding its last meeting of the year later Thursday. It's widely expected to refrain from yet more stimulus, having already increased its asset purchase program last month. In corporate news, Rio Tinto stock rose 1.6% after the mining giant named Finance Director Jakob Stausholm as its new CEO, while Electricite de France stock rose 2.6% after it raised its EBITDA forecast for 2020 to over 16 billion euros. Also in the UK, telecoms group and internet provider TalkTalk stock climbed 2.4% after it said it had agreed to sell itself to a buoy fund backed by Martin Hughes Toscafund. WPP stock rose 2.9% after the advertising giant forecast its earnings to rise by double digits over the next 3 years. Oil prices surged on Thursday, hitting a 9-month high after government data showed a fall in US crude stocks last week, suggesting demand remained resilient despite the surge in COVID-19 cases. US crude futures traded 1.2% higher at $48.41 per barrel. Brent rose 1.2% to $51.68 per barrel. Both benchmarks hit their highest levels since early March. Gold futures rose 1.3% to $1,883.95 per ounce. On the FX front, the GBP-USD pair has surged higher for what looks to be a conclusive break above the 2019 high at 135.14. A weekly close above here should confirm the long-looked-for major base, with next resistance seen at 136.20 next, then 137.10, according to Credit Suisse. The UK Cabinet Minister Michael Gove said in a statement on Thursday that we will do everything to secure a good free trade agreement. We will request House returns if Brexit deal is reached. We believe that we can pass legislation before 31st of December. Meanwhile, John Dutch, spokesman of the European Parliament, said that group's leaders are taking stock of the ongoing negotiations with EU chief negotiator Michel Barnier. A balanced agreement remains in the best interest of both sides. The cable pair has popped once again on the positive headlines, challenging the multi-year high at 135.86, gaining 0.57% on the day. The cable retreated to near the 135.70 region. Eurodollar is nearing 122.50, the highest since 2018, and while it has convincing reasons to rise, the pair may have gone too far, too fast, and may suffer a downside correction. The Federal Reserve refrained from adjusting its bond buying scheme, disappointing some that had expected imminent action. Coronavirus continues spreading and has hit French President Emmanuel Macron among many in the old continent. European countries are announcing Christmas restrictions instead of easing around the holidays. US death, hospitalizations and cases remain on the rise. Moreover, a person that received the Pfizer-BioNTech vaccine developed a serious allergic reaction. Additional snags are likely. The dollar slumped to multi-year lows as growing confidence of both a new US stimulus package and the Brexit deal boosted risk appetite at the expense of the world's safe haven. The dollar index was trading at 89.877, the lowest since March 2018. This is today's market news. Thanks for listening. We'll see you next time.